introduce Jim. He's been a long-time supporter of the Chamber, an excellent employee of the Connecticut Small Business Development Center, which is funded partially by SBA. Jim is that's based out of Yukon, but he does have an office in our chamber, and also he has an office in the Westbrook area. He is the person responsible, along with Jennifer DeKine in our office, running our minority programs, our Side Street to Main Street program, Business Know-How. There's no one better than Jim Jackson. And it gives me a great honor to introduce Jim Jackson from the Connecticut Small Business Development Center. Thank you.
Thank you, Larry. And good afternoon, everyone. We're going to talk this afternoon about the three principal programs that are available from SBA for disaster relief. And I've got a brief presentation I'll run through because that will answer many of the basic questions. And then we'll spend the bulk of our time this afternoon answering your specific questions as they come through Jeff and Danielle. So let me get this up here. Let's see, that should share here, and we go right there. There we go. All right. So we're going to, again, I am a business advisor at the Connecticut Small Business Development Center. That's a resource partner of the Small Business Administration, funded by SBA, with other funding through the Connecticut Department of Economic and Community Development and the University of Connecticut. And the program is always run out of the University of Connecticut School of Business. So we're going to talk about business assistance that's available for COVID-19. And so there are three principal areas. For smaller amounts of cash, especially to cover cash flow right now, there's the Economic Injury Disaster Loan Fund and Grant, or EIDL. Many of you may already have applied for that. We'll talk about how to do that if you haven't. The program that is getting the biggest press right now is, because, quite frankly, causing utter chaos out there with the banks at the moment, because everybody's storming the doors, is the Paycheck Protection Program. And that provides capital to cover the cost of retaining your employees. And for an awful lot of small businesses, that's the key item. For folks who also have ongoing loan obligations that are SBA backed, we'll talk very briefly about the Small Business Debt Relief Program. And again, as to put in a promotion for the SBA resource partners, the Small Business Development Center, the Women's Business Development Council, and our SCORE partners, all of them can offer free and good counseling to any of you who may need additional help. So let's first talk about the Economic Injury Disaster Loan Program. That program will allow you to have loans of up to $2 million at a 3.75% fixed rate, lower for qualifying not-for-profits. And long terms as far out as 30 years, although the smaller loans obviously won't go that far. Many of these loans are going to be approved by the SBA based solely on the applicant's credit score. And loans that are under $200,000 will not require a personal guarantee. The most recent feature that came out on Monday is that qualifying borrowers can receive up to a $10,000 emergency cash advance. And that cash advance can be forgiven if spent on qualifying expenses. Now, this particular program comes through the SBA Disaster Relief Program that has been around for years. The program is normally used to provide funding for folks in natural disasters like tornadoes and hurricanes and floods and the like. They're using the same platform to present the economic impact disaster loans, the economic injury disaster loans, I should say. Now here you don't go to your bank, you go straight to SBA via a website. The money comes directly out of the US Treasury and into your bank account if you're approved. And the web link is right there, and that was also available on both the chamber websites and at the SBDC website if you need it. Here's what that web page looks like if you get there. It's a relatively simple 5-step process where you put in a simple amount of information. You have to do some certifications that you just check boxes on just to say that you're current on your taxes and so on and so forth. You will get a confirmation number at the back end if you filled it out correctly. That means you're in the queue and we'll hear something from them sometime. We have not heard of too many people having been processed yet because just about everybody in the country has applied for this into a system that's more designed for local disasters. So I expect SBA is scrambling to keep up and get the processing going. But in any case, get a confirmation number before you log off. The way this site works is you can't progress from step to step unless you filled out all the information that they're looking for correctly. So at least it's a little bit more user-friendly. The program that most people are interested in right now is the PPP program, the Paycheck Protection Program loan. That offers loans that can range all the way up to $10 million at a 0.5% fixed rate. These are short-term loans of only 2 years. The maximum loan amount for any given organization, though, is 2.5 times your average monthly payroll in the periods prior to February 15th when the disaster was declared. The first 6 months of payments are deferred, and the loan can be forgiven in part or in full if the proceeds are spent on qualifying expenses and keeping people employed. There are, again, you have to use the proceeds for qualifying payroll and other expenses. We'll talk about that in a minute. There are no fees for the borrower in this program. The SBA pays the lenders the fee for processing your application and any agent fees. Now, an agent cannot charge the borrower directly for loan assistance for filling out the application or coming up with the numbers and so forth. Agents can be anybody from private consultants to your attorney, your accountant, anybody who is acting on your behalf to help you apply for and obtain this loan. You can only get one of these loans per borrower. You can't renew it. You can't reapply for a second version of it. Here's what you can use the funds for. You have to use them to fund payroll costs, so that can be all the salaries, wages, benefits, and so forth. Health care benefits, commissions and tips, any types of regular employee compensation. You can also use it for the rent on your building or the interest on your mortgage or on other debt, but not the principal for either of those. And you can also use it for your utilities. To qualify for loan forgiveness, not only do you have to employ a minimum number of folks similar to what your payroll was before the disaster, but you have to spend at least 75% of the loan proceeds on those payroll costs. So who can borrow under this program? Curiously, just about everybody. Of course, small businesses, which has always been the SBA's purview, but they have opened it up for private not-for-profits, for tribal businesses, for veterans organizations, sole proprietors who also have employees, independent contractors, self-employed people or gig workers now qualify to be able to apply. You have to have under 500 employees to qualify, which is virtually every small business. Although there are a couple of business categories, like certain manufacturers, who can have up to 1,000 and still qualify. Applicants need to start gathering information that will ultimately be required by the banks, because these go through your local bank. You'll need your 2019 tax return or your end of year balance sheet and profit and loss, your financial statements. If you've got employees, you'll have got to have your last 4 quarters of your 941 payroll forms. You got to verify employees in payroll who may have had excess of $100,000 in compensation. If you also use 1099s or you are a self-employed, you'll need your forms 1099 to demonstrate what you've either earned there or spent there. Your health insurance and retirement plan company contributions. And I didn't use my spell checker there, so we'll fix that later. And you may, for some banks, be required to show your business entity documents, like your articles of organization for an LLC, your charter for an S Corp, or similar documentation. Some of the quick questions that are being asked, how do I get forgiveness for my loan? You have to go back to the lender, which is your bank, for forgiveness, and you have to file an application for that after the 8-week period for which you used the loan has expired. So there's a bunch of documentation you'll need. Those forms, by the way, to my knowledge, are not yet available from SBA. Can you get more than one paycheck protection loan? The answer is no. And the entity is limited to a single one. And that loan will be registered with your TIN to prevent multiple loans. When you go to get it, any SBA 7A lender, which is mostly banks, but also some credit unions and a number of non-bank lenders like the Community Investment Corp or Community Economic Development Fund, are qualified to accept applications. Now, I can tell you, based on what we've been seeing this morning amongst our associates and our clients this morning, it is utter chaos out there. Most banks are not yet fully prepared to take applications, even though today is the official day for opening the program. Some are claiming they don't yet have complete guidance from SBA or the Treasury, and some have announced that they will not be accepting applications until at least Monday. Others are also opening up their own online portals or apps for their customers to apply. So stay in touch with your business bank in order to find out what they want as part of the process. The core application and core requirements are going to be the same, but the bank is still going to underwrite the loan with their own underwriting principles, in addition to those required by SBA. One of the other questions we've been getting a lot of is, how does this loan coordinate with any other kinds of loans or financing? So if you apply for the Paycheck Protection Program loan, you can still apply for any other form of SBA financial assistance, including the Economic Injury Disaster Loan. So I've got clients who are certainly going to apply for the Paycheck Protection or the Economic Injury Disaster Loan, but who also need to buy, say, a new piece of equipment. So they'll go out and get a 504 loan for that, as if business was going on as usual without the disaster. Because these disaster proceeds cannot be used to expand your facility. They can't be used to open up new markets. They're primarily to be able to keep you in business because of the disaster. You can't use the Triple P loan for the same purpose as other loans. So you primarily use it to cover the 8-week payroll period that the loan was there for. And so if you do that, as you should, you can't use the EIDL loan to cover that same period. You can use it for other costs or for other workers or a payroll in a different period. Now, one of the things that's been out there, again, forms are not quite available yet, but this is an interesting and potentially very helpful program for those who have existing non-disaster SBA-backed loans. It's called the Small Business Debt Relief Program. So if you have an SBA-backed 7A loan, a 504 loan, or an SBA-backed microloan, you can apply for the debt relief program. It's also applicable to new borrowers of non-disaster loans within 6 months of when the CARES Act was signed, which was last Friday. So you cannot use it for the EIDL or PPP loans because they have their own terms and are not eligible for coverage. But if you have other non-disaster SBA finance loans, SBA will pay 6 months of the payments of your principal, interest, and fees directly to the lender. Now, you have to request that relief from your bank or SBA lender for each eligible loan. To my knowledge, those forms are not yet in place. You may also have heard that the SBA was offering what was called a 6-month forbearance on existing SBA-backed loans. And many of you who have those may already have asked for and gotten that forbearance. What the district office is telling us right now is that if you did that, then the Small Business Debt Relief Program would pick up 6 months from now on the next 6 months worth of payments on that deferred or forbearance loan. So those are the three programs. A little plug for SBDC. We provide no-cost confidential advice and guidance to our 14 advisors around the state. We can assist all small businesses, the 1099 contractors and self-employed, help them select the best options. We can help with your loan applications and understanding the process, and we coordinate with our other resource providers and our local economic development offices. Last year, we helped our clients find over $49 million in capital and launch 140 new businesses. We have a page on our website also offering plenty of COVID-19 resources, and it's being updated hourly as we get new information. So with that, I will bring it back to Johanna, and we will start answering questions.
I think I'll take it from here, Jim, if you don't mind, and Johanna and I'll kind of tag team this portion. First of all, great job with your presentation. As always, we appreciate that content. We do have a number of terrific questions coming in. A lot of them are similar in nature, but we'll go through them one by one, and we'll get to the end here. So the first question has to do with the $10,000 figure. We're seeing $10,000 associated with a number of the different programs that are available. I think there's some confusion between what is actually a grant and what is an advancement on one of the loans. So if you could kind of take a minute or two to kind of parse out the differences between the $10,000 grant and the advancement on a loan.
Yeah, and I think part of the problem is that the word grant has been tossed in kind of carelessly, even by some of the government officials. The $10,000 loan advance is associated with the Economic Injury Disaster Loan Program. And this was a modification made to that program over the weekend. For any of you who applied last week during all the chaos when the website went down, either before or after, they only changed the website about 4 times before they got to the simplified application. What you find is that they have added a feature where you can request an up to $10,000 advance on the loan should you get approved. And if it's spent on qualified short-term expenses, it can be forgivable. So while the rest of the loan, let's say you borrowed $50,000 on your economic injury disaster loan, the first $10,000 of that can be forgiven. And the balance of the 40 then would be what you'd pay back at 3.75% interest.
Thank you, Jim. Appreciate that. There's also some confusion about when you submit, I believe it's through the IDL system, that there's not an actual field where you submit an application amount, that you submit financial information, and then there's an assumption that they kind of develop an amount for you, and then there's the $10,000 on the front end. Can you provide a little more insight on that, please?
Right. Your application goes through an underwriter who will then be in touch with you to gather additional information as needed to support the loan application. They did not put a loan request amount on there so as not to unduly raise expectations. So, a company that only has $200,000 worth of annual revenue because it's a 2-person operation can't ask for $2 million. Wouldn't possibly get approved. So you have to wait for the underwriter to get back in touch with you to determine what they need to back up the loan application and help determine what loan amount you're going to qualify for. Now, the 10,000 is an up to number. So if you were going to be lent $20,000, for example, they may only give you, and I have no basis for the number, but they might say, all right, we'll give you 4,000 of that as the forgivable upfront amount. So the 10,000 does not necessarily apply to every business every time.
Understood. Thank you, Jim. Moving along here to our next question. What's a realistic estimate at the lag time between application and actual awarding, given the size of the SBA, the magnitude of the requests, and the involvement of lenders with a variety of different resources to handle the applications with a specific importance on the PPP side.
All right. And that, that if I had a nickel for every time I got asked that question already, I'd be retired, wouldn't even be on the webinar right now. For the EIDL loans, we'll start there for a moment. Those are the ones where you apply directly to SBA online, where the money comes directly out of the Treasury right into your checking account. I'm expecting 2 to 3 weeks minimum before you hear anything, just because of the volume. And part of that is because of the fact that SBA is using their disaster loan platform. When there is a disaster, like the recent tornado in Nashville, they'll put together a tiger team from all over the country to get down there and process the tens of thousands of loan applications they'll get from homeowners and businesses and others who qualify. Well, this is nationwide. There is no tiger team bigger than all of SBA. So they have been absolutely swamped, as you can imagine, I can imagine it's several million applications. And if they can get to you in 2 to 3 weeks, I think we'll be seeing a minor miracle. Now, the PPP program, on the other hand, is being processed by all of the lender, SBA 7A lending banks and other financial institutions. The good news there is that you will have many more hands and feet being able to look at all of those applications and process them. They will be processed locally. The banks themselves will be using an electronic system in the background that SBA has for lenders to be able to get the loans in and processed. The bank will disperse the money, not SBA, and then SBA will be in charge of the servicing and so forth. So
thank you.
It's more a matter now of how swamped your bank gets. And I know every one of the banks is feeling the pain right now in terms of the number of people queued up at the door, whether it's the real door in front of the bank or the virtual one in the portal that they're setting up. Again, I suspect we're going to see weeks worth of backlog as your bank deals with each one of the applications it gets.
Thank you, Jim. So this next question is technical in nature, but it's a very good one. If you had a significant change in payroll between 2019 and 2020 because you added staff, can you use the gross payroll average for the first 3 months of 2020?
I believe you probably can, but it's going to be one of those things you've got to explain to the banker. The good news is, because you're going to be doing this with your local bank, there's ways for you to get that information back to them in the back and forth. They're going to document most of the payroll from last year's results, but certainly they're also going to want to see the 12-month period going back from the date of application.
Okay, thank you, Jim. This next one deals with industry sectors. Can medical professionals, i.e. doctors, dentists, and social work counselors apply?
Yes.
Very good. Thank you. Moving on. For the PPP, on the number of employees, and this gentleman is assuming that only full-time employees are used, if we had a steady number, but then a few left in the beginning of the year, which are not related to the COVID-19 situation, do we still have to maintain the higher average number of employees? So in this particular case, they average 13, but now have 11, with none furloughed as a result of this crisis. And I'm happy to repeat that if you need it.
No, that's a question that's coming up. There's actually two parts to that question. The first is that both full-time and part-time employees can qualify for the payroll. I think there's still some confusion in the banks themselves as to how that's going to get handled. Again, that's something I think you're going to have to deal with one-on-one with your banker. One of my clients right now is in the slow season of a seasonal business. By the time things get back out, they'll be booming, so they'll have even more people and will need to cover more payroll. On the other hand, if someone had a seasonal business, say around Christmas time, and now they're in their slack season, they wouldn't be able to cover the same number of people without some form of dispensation. And I think that is going to be one of the things that's got to be modified as the program goes forward.
Thank you. Next one is with regard to PPP. Is this loan, speaking of PPP, also based on credit like the EIDL?
I'm not sure. We're still trying to parse that out. I believe that it'll be less dependent on credit, but more dependent on evidence of ongoing payroll and employee participation, that you keep the employees on and so forth. So you're going to document it as much with your financial statements and your 941s and that sort of thing, and probably statements from your payroll provider.
Okay, I'm going to kind of group these next two together because they're very similar in nature. For the $10,000 advance on the EIDL, can you apply for a EIDL only for $10,000? Which kind of goes back to the first question we asked. Also, I read that the loan does not have to be approved to gain access to the $10,000. And as a follow-up, if someone applied for the EIDL, can they ask for the $10,000 cash advance right now?
The key here is that the loan is still going to get some kind of processing. I mean, the original intent of the SBA website, as I understand it from the district office, was to be able to speed up that first tranche of money, that first 10 grand or up to 10 grand. I think in practice, the system has been overloaded and has not been able to do that. I do not know yet decisively whether or not, but I have heard too that even if you turn down for a larger portion, you can get some portion of the upfront that would be forgivable. I have not had confirmation of that yet through SBA itself.
Okay, great. This next one's a bit of an example, so we'll work through it and have a question at the end. I'm nervous that even when my business is able to open, that the financial hit will last for at least 4 to 6 months due to the type of business that I have. Based on the presentation, it sounds like I should apply for both an EIDL and a PPP loan, and then use each loan for forgivable debt. Example, use PPP loan for 8 weeks of rent, utilities, and payroll, and then do the same with an EIDL loan for the next 8 weeks, which would at least give me a 4-month head start on staying in business. Am I interpreting this right with the forgivable debt restrictions? My plan was to have my employees collect unemployment until I reopen my office and then use the loans. Am I looking at this wrong? Good question.
That's a great question, because part of certainly you can chain them together like he has described. Chaining them together does not make the EIDL forgivable beyond the up to $10,000. That still has become the 3.75% term loan that has to be paid back, unless they change the program again at some point. It's not impossible, but none of the legislation allows that at this point. So there's no question that you can chain them together. To do that, if you can show that your needs are larger while you're in the EIDL process. Once you get to an underwriter, you may be able to get even more weeks worth of expenses covered, recognizing that only up to the first 10,000 will be forgivable on that loan. Whereas on the triple P loan, if you have used it accordingly in compliance with the rules for payroll and some other expenses, mostly payroll, up to 100% of that loan can be forgiven.
Great, thank you. Okay, moving on here. If your business only has 1099 freelancers and or contractors, how is this handled? As an example, only half of those freelancers, only half of those freelancers reach the $600 threshold for 1099s. Can you still claim the full average monthly labor expense?
I believe you can, but what you're going to have to do is be able to document that that money was dispersed to them, and probably have to show what it was for. If you're using folks in small enough doses that you're not even reaching the $600 1099 limit, being able to demonstrate from your records that you paid them for services rendered will be part of the process.
Okay, great. So these next couple, I think you addressed, but let's just go through them again. Let's see. Can a nonprofit apply for PPP, and most of our staff are part-time?
The answer is yes.
I believe 501c3s can apply. Is that fair to say?
That's correct. As long as you consider what's called a private not-for-profit rather than an organization that runs on government money. So if your primary funding source comes from government, state or federal, you're not qualified to apply for the PPP loan. However, if you rely on donations from the public, from events that you run and so forth, for the funds that you use for your charitable end, you can apply, and it doesn't matter whether or not the employees are full-time or part-time.
Great, absolutely. So there's a question that came in about the distribution of Jim's slides. Jim, I assume you're comfortable with us sharing these slides after the fact?
I will. I got to clear that with the head office, but we'll have that information available both for the chamber and on our own website.
Okay, we will confirm
right,
that.
Jeff,
I have a few. Yes.
I did have one coming through email.
Okay, go ahead.
Since the money, PPP, will go quick, is there talk of a second round? Many that are closed, i.e. dentists, need it when they have employees back. So later is better. And does unemployment pay come into play for wages?
All right, let's take that in two pieces. First of all, even if you're not going to open up immediately because of what's going on, like a dental office or a doctor's office, get your application in now, because you can apply it for the program for 8 weeks after you reopen. There is a cutoff date of June 30th for applications for this program. Anybody who applies for the program has to have their application in by the 30th of June. Now, the big fear around the country is that the $349 billion will get snapped up in a heartbeat, and there won't be anything for people who are late in applying. I've heard no talk whatsoever yet about whether or not the program will be expanded or funded further or extended in terms of the application date. I think a lot of that is going to depend on the next couple of weeks worth of experience in terms of how many loans are received and approved, as well as what's going on in the country with the spread of the virus or the flattening of the curve. If we're in it for a longer period of time, I think Congress is going to be pressured to take further action. If things get under control a little bit faster, then the program may stand as it is. And by the way, that's my personal opinion. There is no official word behind that. Jeff, you're still, there you go.
Yeah, sorry about that.
Okay.
I got you. We had one come in. It's kind of a follow-up to the last question. Just a note on the last question regarding independent contractor use. I would be careful in that they are not considered employees and are not subject to payroll taxes, etc. Those independent contractors are essentially sole proprietors, and if other IRS/payroll regulations and definitions of employee and payroll, I would think the independent contractors will apply for the SE eligibility. The payroll independent contractor is a slippery slope. Would be very careful in that process. That's just more of that's from an accounting professional, just for, I think, the general information on that point.
Yeah, and I think that's good advice, because there are a lot of people who legitimately use independent contractors where they have an arm's length relationship between two business relationships, whether the independent contractor to the first business is a sole proprietor, or maybe another little LLC that provides a service they don't provide out of their own business. That's a fine business relationship. You both can apply for loans for their own purposes. For companies that have been paying a lot of folks under the table, they're probably not going to be able to document that, and therefore aren't going to get approved.
Okay, great. Thanks, Jim. And I only have one more, and then I'm happy to kick it back to Johanna or see if Danielle or anyone else has anything to share. But it goes back to this idea of the grant versus the advancement, and just kind of to drill this into everyone's head here. there is not just a straight grant, and you believe that that term grant is probably not used properly in this instance.
Correct. The proper term is forgivable loan, because the forgiveness is going to be based on terms and conditions associated with the loan and what that portion of the money was spent on. I do not yet have a full list of what's going to qualify for the EIDL forgiveness in terms of what kinds of expenses you can use it on and then have forgiven. My impression is that it is not a universal forgiveness, because if it was a universal forgiveness, then you could kind of consider it a grant. But I believe it has to qualify for certain types of uses. I'm still asking for clarification of that from SBA myself.
I'll kick it over to Johanna, who has another question.
All right, Jim, I just received one via email. If nonprofit is a 501c3 and yet funded from state and Fed, I thought they are still eligible. Where does it say not eligible?
That I haven't seen in clear text yet. The SBA is trying to differentiate between a private not-for-profit and one that, quote, isn't. And I'm still looking for better definition of that myself. And I will have to get back to you on that one, because I'll go dig into that this afternoon and see what I can find.
Thank you, Jim.
We have more come in. Do I understand that you must start bringing employees on board by June 30th? What happens if we're still locked down?
I believe that's still not completely clear. The use of the funds is supposed to be for an 8-week period. And they're hoping to do that as soon as you can get the loan. Normally it would be the 8 weeks following the disbursement of the loan. The later you apply, the later you'd get your money and the later that would start. The later you apply, the higher the risk that the program runs out of money and you don't get anything anyway. So if you're really going to be locked down and really just can't use employees, and it would just be a waste of the payroll, I would suggest just applying and seeing where it goes with respect to the dates. Again, we still are looking for clearer guidance on some of that.
Okay, we've had a few more come in, so bear with us here, Jim. 2 from the same business owner. So I'll throw them to you in tandem here. How does the lender audit what the loan money was spent on? And does applying for the loan lower my credit score?
I'll take the last one first. Your credit score is not impacted by this application. On the first one, when you go for forgiveness of the loan, they're going to ask for specific evidence of your payroll expenditures, where else you dispersed the loan on. One of the suggestions I heard yesterday, that does make a lot of sense, is it may make sense to open up a separate business checking account or separate account for the proceeds of the PPP loan, so that it's easier to trace where the money went, and kind of keep a firewall between that money and its expenditure and the rest of your general funds.
Thank you. We have a question about, will you be addressing the bridge recovery loan today? And I believe she's referring to the DECD package.
That's the state bridge loan, which most of you know has already been, the applications were shut down after like 48 hours because they just were flooded with them. They got 4,000 plus applications for the 25 million that was then available. And even though they raised the amount to 50, they closed off the applications because they just had so many of them, they couldn't process them all. As they process them, they'll determine whether or not they use up the 50 million and have anything left over or not. If you have applied for it and you did get confirmation that your application was received and that you uploaded all of the finalized required documents within the 7 business days that was also required, you will be in the queue. Now, it's also important to know that the bridge loan was intended to be just that, a loan to cover some expenses until you got the other federal loans disbursed. The loan terms are 0% interest for 12 months, but the loan is a balloon payment 12-month loan. So if you borrow, say, $20,000, you don't have to pay any interest on it for the 12 months, but in month 12, you have to pay back $20,000. The state has the unilateral authority to grant a 6-month extension on that, but that's as far as it goes. Again, it was only intended to be a bridge between today and when you get your federal money. In practice, they're going to be as backlogged, I think, as SBA may be on some of these things. So who's going to beat who to the punch and being able to disperse loans is probably worth an office betting pool.
Okay, so while I have the floor, I'll continue on the next one. I know Johanna has another one that came in through email, at least one more, but I'll share this one. Does payroll costs include payroll taxes? Should we figure the amount for payroll from looking at the last year's February 15 through June 1st period, or is there another way we should come to that average?
When they come back for your data from the bank, I believe they're just looking at gross payroll costs, not your employer contributions. But again, that's not clear. I've seen two different versions of that from different sources, so I'm not sure where SBA is on that right now. But I know they're looking for your 941s, you're looking for your payroll records as well as your tax documents to be able to kind of parse out what your real payroll experience has been. It does also include, I think as I mentioned before, things like the premiums you're paying for health insurance, not that your employees paid, but what you paid yourself, and any retirement contributions you may have made on their behalf for the company.
Okay, a few more coming in through chat here. I believe you addressed this briefly earlier, but who determines the amount of money borrowed? I believe it's the underwriters in most cases when there's not an application amount, but you care to take a crack at that one, Jim?
Yes, for the EIDL loan, the SBA underwriters are going to determine the amount that they're going to offer to lend. You have the option to take it, to take part of it, or to take none of it. No penalty, no harm, no foul in any of those cases. For the PPP loan, the loan amount is limited to 2.5 times your average monthly payroll cost during the period that winds up becoming the determining period for when you were spending payroll. So even though there's a $10 million cap on that, you know, if your payroll was $20,000, you're only going to be able to borrow $50,000.
Understood. Thank you, Jim. Next one is my understanding that the PPP forgiveness is, oh, it moved away on me. Hang on one sec. My understanding is that the PPP forgiveness is only for the amount spent during the 8-week period beginning on the date of the origination of the loan, where we might borrow $20K, but only spend $15K during that period or something to that effect. That come through okay on your end, Jim?
Yeah, I believe he's probably right about that. So if you didn't spend it all in that period on qualifying expenses, so payroll, you can spend up to 25% of the loan on rent, on utilities, and on loan or mortgage interest, not principal. And as long as you maintain those ratios along with the employment levels that are going to be required of you by the terms of your loan, then those things will be forgiven. If you stretch out the use of the proceeds for whatever reason, then I believe those proceeds will require repayment over the 2-year period. You do get 6 months of forgiveness. The first 6 months you don't have to make a payment, but that means there'd be 18 payments for the rest of the 2-year period for whatever is not forgiven.
Another question here, Jim. Does it make sense to borrow the maximum amount and prepay if not needed? I assume there's no prepayment penalties. That was my editorial addition there.
Yeah. There are no prepayment penalties on any of these loans.
Okay, great. So this next one, although not part of the CARES Act, but I think part of the Families First Act, Can we please discuss the employee retention credit up to $10,000 per EE unless less than 100 employees? Then I think 50% or 5,000, and the deferral of payment of ER payroll taxes. A lot of abbreviations in there.
The answer is not really, because I don't have the best information on that at the moment. I've been struggling to try and understand that myself, and downloaded some updated information yesterday on the FFCRA program, because I had another client that was working with that program. There are a lot of blind alleys and dead ends in that program. And there may be some tax consequences between what you do if you get credit from the IRS for sick leave or family leave qualified under that program, versus using a triple P loan for employees as well. That needs to be worked out at the interagency level, and I've not seen guidance on that yet.
So that exhausts the chat, and I'll turn the floor back over to Johanna for some questions that have come in through email.
All right, you're doing a great job, Jim. Thank you.
Thank you.
All right, I understand this is more for small business, but can you spend a few minutes on what may be available to the larger companies over 500?
You there probably are looking at dealing with your own financial resources through your banks and other lenders, both public and private. If you don't qualify under SBA size guidelines, either employee numbers or revenue numbers in terms of who's a small business, depending on your industry code, then you haven't had access to SBA lending at all anyway. So you're pretty much on your own from the standpoint of finding that kind of financing. Now, the unemployment system, at least in Connecticut, does offer a program called the Shared Work Program, which can be quite useful. The Shared Work Program allows you to take a certain number of employees that you still need, but run them perhaps on a reduced schedule, anywhere from 10 to 60% less than their normal working hours. When properly applied for, this plan will allow you to pay them for their reduced hours at their normal rate. You maintain their benefits, and then the Department of Labor will give the employees a partial unemployment benefit, which helps make up part of the lost wage for not working their normal shifts or the normal length of shifts.
Okay, perfect. Next one. Do you think my unemployment expense will be negatively impacted over the next year because I laid off everyone? Thus, I would be better off bringing them back through PPP, even though no work?
Great question. The issue here has got to be resolved ultimately legislatively. They've been making some major exceptions for many of the underwriting criteria and so forth for these loan programs. They're going to have to deal with the blowback from increased unemployment tax rates and so forth. I mean, after the 2008, 2009 recession, where a lot of layoffs took place, of course, the state had to borrow lots of money from the federal government to cover the unemployment costs back then, and of course put a surcharge on employers' unemployment tax, so that until it eventually got paid back. Presumably the same is going to happen here, unless for some reason the government at the federal level passes legislation that changes that normal process.
Well, that's all we have on the chat.
Yeah, I've got another one that just popped up.
Cool.
This is, I've left voicemails to qualifying banks with no response from any. Any suggestions? And just, I want to just pause for 1 second. So if you go on the Middlesex Chamber website, the very front tab that you see says funding, there is a link there that is linked to all the SBA approved lenders, or it's right there at your fingertips. So make sure you take advantage of that as well. Sorry, Jim, on to you.
No, I'm not surprised. One, I'm not surprised. First of all, what we're recommending is that You work with the bank where your business has its current banking relationship, whether it's checking or credit card or whatever. What we're finding is that some banks are already saying that if you don't already have an existing banking relationship, they're not going to accept your PPP application.
All right, great. So if there's any other questions, we have a couple more minutes. You can just put them down there in the chat. I don't have anything that's coming to info. So for now, if you still have questions, you can still put in the chat. But in the meantime, we're going to toss it over to Mr. McHugh, who's going to come on and close us out.
Well, thank you very much to everyone that participated today. Thanks to Johanna and Jeff for doing their usual outstanding job. And Jim, a tremendous job as usual. Thank you very, very much for answering many, many questions today that people are concerned about. I know you're always there for small business. And again, sincere thanks. Everyone have a good weekend. Stay in touch with the Chamber. We're here to support you. We got your back. Thank you very, very much. And we will get through this. I guarantee you, working together as a team. Thanks a million and have a great weekend.
Thank you, Larry.
Thank you, everybody. Have a great weekend.
Stay well, everyone. Thank you.